Thanks for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon. But before we get started, let's take a quick glimpse at today's highlights. A fresh round of talks on the Regional Comprehensive Economic Partnership, or RCEP, a multinational free trade deal, kicks off in Busan on this Monday. Small and mid-sized manufacturers have been hit hard by falling exports and sagging domestic demand, with operating rates falling to a 6-year low in August. The 10th round of RCEP negotiations have kicked off this Monday in the southern port city of Busan. And although the trade pact is expected to gain momentum following the conclusion of the U.S.-led TPP, many obstacles still lie ahead. Our Shin Se-min tells us more.
Having missed out on the window to join the Trans-Pacific Partnership Agreement as an initial member, Korea is accelerating efforts to be part of another mega trade deal in the works, the Regional Comprehensive Economic Partnership, or RCEP. The RCEP has 16 parties involved, including Korea, China, Japan, Australia, and India, along with 10 member nations from ASEAN, aiming to create one of the world's biggest economic bloc with 3.4 billion people. And if signed, Korea's trade ministry predicts that the deal will lock in nearly 30% of the global trade volume, or some $10.6 billion US, involving a combined population that's much greater than that of the TPP.
Although it isn't fair to compare the two trade pacts, the TPP and RCEP, since they are different in characteristics, it's clear that RCEP will open up a wider consumer and market base, considering the number of countries it involves.
That's why Korean companies are expected to see more visible benefits from the RCEP agreement, as many of the member nations also have faster growing economies than those in the TPP. But the road ahead still looks bumpy. In terms of progress made on the pact, it's unlikely the talks will be able to meet China's hopeful year-end deadline, despite numerous negotiations held since 2013.
It's most likely the deal won't be reached by this year, but the speed of the talks will pick up pace, because the US and Japan-led TPP agreement has done enough to provoke China to add speed to the RCEP.
At the same time, reaching an agreement among economic giants like India, China, and Japan will be a considerable hurdle, adding more skepticism to a speedy conclusion of the deal.
The focus is now on how the negotiations in Busan will unfold, as it's the first RCEP member nations meeting to take place following the landmark agreement on the TPP. It's likely to add pressure to involve parties to sort out differences and to make faster progress on the regional trade framework. Shin Se-min, Business Daily.
And joining the Trans-Pacific Partnership would be advantageous to Korea in the medium to long term. That was what Korea's Finance Minister Choi Kyung-hwan told U.S. broadcaster CNBC in an interview on the sidelines of an IMF meeting in Peru. But he conditioned that by saying the government will make an official position only after it conducts a detailed impact analysis when the details of the trade pact are released. The top economic policymaker also commented on China, calling it both an opportunity and a threat to Korea's growth, adding that Seoul needs to shift its export strategy from one that ships out intermediate goods to final goods, as Beijing also turns to an economic growth model that centers on domestic demand. Meanwhile, operations at Korea's small and medium-sized manufacturing firms have slumped to a 6-year low on the back of slack domestic demand and exports. According to a survey by the IBK Economic Research Institute, the operating rate of local manufacturing firms of fewer than 300 employees was at 70.2% in August, down 1.2 percentage points from the same time last year. Excluding figures for the shorter month of February, this is the lowest rate of operation since August 2009. But a recent Finance Ministry report says that despite the uncertain global economic outlook, domestic demand is starting to pick up due to the government-led sales events and lower consumption taxes. Global firms may face growing challenges with profits expected to dip to levels not seen since the global financial crisis. Bloomberg expects the net profit of firms listed on S&P 500 to fall nearly 7% in the third quarter from a year ago, while Reuters estimates earnings to slide 4.2%. If things fall in line with these projections, it would mean corporate profits would have recorded negative growth for the second consecutive quarter, the first since the second quarter of 2009. This comes on the back of slowing growth in China, as well as falling commodity prices and escalating economic concerns in emerging economies. And for more on last week and this week's stock market action, we have economics reporter Choi Jin-seok from SBS-CNBC joining us on the phone today. Hello, Jin-seok.
Hello, thanks for having me.
So let's first get started with an overview of how the Korean stock market closed last week.
All right, the Korean stock market closed mixed at the final day of a holiday-shortened week. The Kospi rose by 0.6% to close at above the 2010 level last Thursday, boosted by foreign investors who bought stocks worth more than 180 billion Korean won or 160 million US dollars. Share prices of most blue chip stocks except the state-run power producer KEPCO were higher. Over the week, the Kospi rose by 1.8%. Samsung Electronics' better than expected earnings guidance was a positive momentum for the market. The Kosdaq, on the other hand, fell by 0.7% last Thursday, ending the week with a 0.9% decline. Daum Kakao, CJ E&M, and other blue chip stocks closed all lower on that day.
All right, then. How did the Korean stock market close on the first day of this week?
Yeah, the market continued its positive mood at the beginning of today's session as well. Both foreign investors and institutions put their money into the market in early trading hours. The Kospi even touched 2030 level around noon as global equity markets closed strong last week due to expectations that the Fed will hold raising rates at least for a while. The sentiment in the domestic market was positive too. However, both indices lost their steam after 2 p.m., ending mostly flat for the day. Only the Kospi continued its 5-day winning streak.
Well, let's move on to some major market events lined up for this week. What should we be keeping our eyes on?
Yeah, earnings reports by big U.S. banks will be a market focus. Starting with JP Morgan on Tuesday, local time, 13 out of 30 key banks in the U.S. stock market will disclose their quarterly results. Expectations are quite low, although the banks are estimated to record year-on-year profit growth. The expectations have been slashed compared to the beginning of the quarter. Along with financial institutions, IT giants such as Intel will report their earnings too. There is a term, the Intel rally, in the Korean stock market, meaning chip makers and IT component companies in Korea often benefit from Intel's robust earnings.
So many will be turning to those figures, but the timing of the U.S. Fed's rate liftoff still remains a key factor that investors should keep a close eye on, right, Jin-seok?
Yeah, in that sense, several Fed officials will talk about the potential timing of the rate hike through conferences, discussions, or addresses this week. Although only 8% of futures market participants predict the Fed will raise its interest rate at its October meeting, Fed officials have been reaffirming that the rate liftoff this year is still most likely. That's why we still need to see how the officials give hints to the market. In terms of economic indicators, September retail sales on Wednesday and consumer prices on Thursday are two of the most important U.S. market events. Consumption is one of a few bright spots of the U.S. economy, while September FOMC minutes revealed Fed officials were worried about low inflation, eventually leading their decision to stay on hold. It will be quite important to see how the markets interpret both numbers and connect them to the timing of the rate hike. This has been Choi Jin-seok from SBS-CNBC.
Now, there's no doubt that the Volkswagen emissions scandal has put a dent into German automakers' credibility and its diesel vehicle sales. But Volkswagen's latest misfortune has been creating new opportunities for others in the hybrid and electric car market. Our Won Ji-yeon has the story.
Just a few months ago, the popularity of diesel cars was taking off in Korea. That was until the German carmaker Volkswagen came under fire last month for deliberately installing software on its diesel cars to cheat emissions tests. Feeling betrayed by the once trusted automaker, consumers around the world are beginning to turn their backs on diesel.
Volkswagen's clean diesel image has now been damaged. The scandal has also proved that diesel engines come with many limitations, so now we can expect a relative drop in diesel car sales.
A recent survey by Korea's auto research firm Consumer Insight shows that the ratio of car owners wanting diesel over other alternative fuels had dropped by more than half the amount reported before the scandal. Meanwhile, consumer demand for hybrid cars had grown to 35% in September, more than 3 times the ratio from July. Now experts are saying that the golden age of electric cars may not be so far away.
Until now, the automobile industry focused mainly on the quantitative growth of its brands, but the scandal has opened the door to an era of electric and hybrid vehicles.
Experts added that the shift in consumers' choice in eco-friendly vehicles could reshape the entire car industry. They are now advising Korean car makers to step up their hybrid and electric sectors to prepare for the future of automobiles. Won Ji-yeon, Business Daily.
P2P lending, or peer-to-peer lending, has been gaining popularity here in Korea as a convenient way to secure funds without going through traditional financial intermediaries. The online lending platform also creates a win-win situation for both lenders and borrowers, further adding on to its appeal. Our Lee Ju-young tells us more.
Let's Go is an online startup in Korea that recently got a big boost in its investment funds, raising over $17,000 in just 16 minutes from around 150 anonymous investors. This was through P2P, or peer-to-peer lending, which is a practice of lending money online to unrelated individuals or peers without going through a bank.
For startups like us, it's very hard to get loans or procure funds from existing financial institutions. But with P2P lending platforms, we are able to get the funds we need.
It's easy to see the appeal. Investors are guaranteed higher returns than banks, and borrowers with low credit ratings, like fresh university graduates or startup companies, can borrow money at a cheaper rate of 7 to 15%. It's substantially cheaper than the 30% range that would have been charged from other loan companies or savings banks. For this reason, the popularity of Korea's first P2P company, 8%, is immense. Since the company first took off in December last year, it mediated over 200 business transactions worth an accumulated $5.7 million.
If both borrowers and investors meet directly through online platforms, the rate of return is much higher.
The peer-to-peer loan industry is growing at a rapid pace, but experts say there are not enough regulations set in place to control the growing demand in Korea. They say more rules need to be devised, not only to protect investors, but also to guarantee the future growth of the industry. Lee Ju-young, Business Daily.
You might reminisce on those times when listening to music meant perusing through CDs, cassette tapes, or LPs. But it's obviously a very different music landscape now, as digitized forms of music take center stage and streaming technology gets smarter. Our Eunice Kim has this report.
A refreshing tune wakes this user up in the morning, intelligently selected with the day's weather forecast in mind. The recommended music also switches according to the user's heartbeat. While exercising, something funky, a calming piece when unwinding at home.
Our service selects music that matches our clients' activity from the moment they wake up, go work out, start their commute, until they go to bed.
This smartphone application curates music and streams it like radio, but categorized by era, genre, and theme. Free to users and running on advertisements, it's amassed 5 million users in the first 18 months of its launch. The success of such services come as real-time music playback via online streaming has become commonplace and sought out. People want music that fits how they feel at any given moment.
We're seeing a transition from an ownership-based concept of music to one that's freely accessible and enjoyed at any given time.
And technology that matches the shifting consumer appetite from possession to intelligent streaming is sure to further advance, with global rivals Samsung and Apple exploring the potential of their own streaming services, Samsung Milk Music and Apple Music. What's also still left to solve is how the streaming paradigm, currently barely profitable, can sustain the greater music-producing ecosystem. Eunice Kim, Business Daily.
And that wraps it up for today. Thanks for watching, and we'll be back tomorrow at the same time, same place. Until then, goodbye.